Hi, good afternoon, good afternoon, good afternoon. Am I audible? Good afternoon, people. Am I audible? Hello, hello, hello. Am I audible or not, guys? Yes? Okay, thank you. Okay. In the morning session, we were discussing about interdepartmental transfer, right? Where one department transfers goods or service to the other department. Now, when they transfer, when the provision, unrealized profit portion will exist, when goods are sent at a cost plus profit or when goods are sent at a market price. When goods are sent at cost, then there is no portion of unrealized profit will be there. So what we are going to do, whenever the unrealized portion of profit will be there, we have to keep a provision for that. Where, sir? In the books of head office, in the books of organization, not in the departmental accounts, in the organizations. So organizations, which account we will prepare? We prepare general P&L account relating to the organization, right? Okay, fine. What are the steps included in calculation of that? Step 1, we have to identify the value of transferred stock included in the closing stock of a transfer department. So in the closing stock of a transfer department, that is the guy who received the goods which are transferred, then we have to find out a stock of such goods, that is goods, interdepartmental goods, in the total closing stock. Total closing stock should cannot be like may not be a completely from goods which is completely received from the other department. We have purchased, we might have purchased also, no? So when we have purchased, that also will be included in the closing stock. So we have to find out how much is the portion of that. Okay. Next is ascertainment of the gross profit ratio on sale of the transferor department. Apply the GP rate on the value to find out how much is the profit portion included in that closing stock which is of interdepartmental transfer. Later we have to pass this entry. One, when you transfer the goods, what would be the entry? Transfer account debit, that is the receiver of benefit, to transferor account, which is giver of benefit. Creation of a provision for unrealized profit, general P&L account debit to provision for unrealized profit. Opening stock, it is provision for unrealized profit to general P&L account. That's it. We have, let's see one illustration, we will understand. If you see one illustration, we will understand. We will start with illustration number 15. Illustration number 15. A firm has two departments, raw material and a manufacturing. Okay, two departments. One is raw material department, the other one is manufacturing department. The finished goods are produced by the manufacturing department with the raw material supplied by the raw material department at a selling price. So raw material department is sending the goods to the manufacturing department at what price, sir? At the selling price. Okay, okay, done. Using the following information, prepare a departmental trading and P&L account for the year ended 31st March 2022. So with the given information, we have to prepare a trading P&L account. Okay. They have given an opening stock of each departments, raw material department and a manufacturing department. They have given a purchases. They have given a sales. Also, they have given a manufacturing expense which is only there in the manufacturing department. They have given a selling expense. They have given a raw material transfer to manufacturing department. Closing stock they have given. Okay. Cost of the closing stock of a manufacturing department consists of 25% for manufacturing expenses and 75% for raw materials. Okay. In the preceding year, raw material department earned a gross profit at the rate of 10%. Salaries of rupees 5,000 and insurance premium of rupees 1,600 are to be allocated between the two departments on the basis of sales ratio. Here they only given salaries of 5,000 how you should allot, and insurance premium of 1,600 how you should allot. Find out the net profit of the firm as a whole. Kindly go through the question, guys. Kindly go through the question. Okay, fine. So, shall we start? People, shall we start? Hello? Shall we start? Are you guys there? Yes, okay. Fine, there are only two departments. First we have to find out, we have to prepare trading P&L account of two departments. Later we can go for a general P&L. trading P&L account, departmental trading P&L account for the year ending 31/3/22. Debit, credit. Particulars. There are two departments, right? There are two departments, raw material department and manufacturing department. Okay, done. Next is what, sir? First we have to bring the opening stock, right? We have to bring the opening stock. So two opening stock, how much it is? Two opening stock, 1,20,000 and 20,000. 1,20,000 and 20,000 and 20,000. Okay, sir. Raw opening stock is done. Next, they have given purchases 8 lakh and 6,000. Two purchases 8 lakh and 6,000. Two purchases 8 lakh and 6,000. Done. Next is what? Sales, buy sales 880 and 180. Buy sales 880,000 and 180,000. Okay, done. Next is what? Manufacturing expense. Manufacturing expense 24,000, which is direct to manufacturing expense. Only in the book of manufacture 24,000. 24,000. Selling expense, it will come in the P&L. Raw material transferred to manufacturing. So for a raw material department it should be treated like a sales, and for a manufacturing department it should be treated like a purchaser. So here by transfer for the raw material department it's a sales. So credit side it's for a raw material department 120,000. Debit side for the purchasing department. Who is purchasing department? Basically your manufacturing department is a purchasing department. So to transfer 120,000. Two transfers 120,000. Okay, sir, done. Done. Next, there is a closing stock of 80,000 and 24,000. By closing stock 80,000 and 24,000. So we can find out a gross profit now, right? We can find out a gross profit. $880 plus 120, 1080. 204,000. To gross profit 204, 120 plus 20, 140, 140 plus 30, 170, 170, 34,000 is a gross profit. Here for this department That is manufacturing department, 34,000 is the gross profit. And for this raw material department, 920 to 160 is the gross profit. 160 is the gross profit. Okay sir, done. Now by gross profit brought down, 160,000 and 34,000, 160,000 and 34,000. Okay, later stock adjustment is there, let it be, we'll do that. In the preceding year, raw material department earned a gross profit. Salaries of 5,000 should be allocated on the sales ratio. So two salaries, sales ratio. Sales ratio is how much basically guys? It is 880 and 180. 880 and 180 is basically 440 and 90, 220 and 45, 9 and 44, right? 44 is to 9 is the ratio, no? 44 is to 9 is the ratio. Sales ratio is 44 is to 9. So 5,000 should be divided among this ratio. So how much it will be? 5,000 divided by 51, no? 53, sorry. 5,000 divided by 53 into 44, 4,151, right? $41,151. Sorry, 4,151. And for this one, $5,000 into 9 divided by 53, 849. 849. This is what, sir? This is salaries. Done. Next is what? Insurance premium of 1,600. To insurance 1,600, again in the sales ratio only, right? Insurance also in the sales ratio only, that is 44 is to 9. So how much was the insurance? Insurance was 1,600. 1,600 into 44 divided by 53, 1328. Insurance is 1328. 1328 minus 1,600, 272. Insurance allocation is like this, 272. Okay sir, done. Now we have to adjust the stock reserve. Very important, listen carefully guys. There is a opening stock, right? There is a opening stock. Listen what they are telling in the question. Cost of the closing stock of the manufacturing department consists of 25% for a manufacturing expense, 75% of the raw material. In the preceding year, raw material department earned a profit at the rate of 10%. In the previous year, it earned profit at the rate of 10%. So which means in previous year's closing stock also there is an unrealized profit, which means in current year opening stock there is unrealized profit. We have to eliminate it. So by, however, of course, here we are not going to eliminate. Okay, here we are going to transfer this to there is a selling expense of 1600 and 800. We forgot that. To selling expense 1600 and 800. This profit we are going to transfer into the general P&L account. Later from there we are going to write off our unrealized profit. One lakh 60,000, 34,000. So 160,000 minus 4151 minus 1328 minus 1600. To general P&L, balancing figure of 152,921 and 34,000 minus 849 minus 272 minus 800, 32079. This shall be transferred into the general P&L account. In general P&L account only that is the entry. Stock reserve is the only thing. So much lines are not required. Okay, first we have to bring the profit portion by departmental P&L account. How much is the total profit? Because we have to take it as a organization as a whole. 152,921 plus 32,079, which is basically 185,000, right? Basically it is 185,000. Okay sir, 185,000. Now Now listen very carefully. We have to eliminate the stock reserves, right? By stock reserve. Working note number 1. This you are eliminating from the stock reserve of the opening stock, right? So working note number 1. Computation of stock reserve in opening stock. Computation of stock reserve in opening stock. So how much is the stock opening stock? Basically opening stock of manufacturing department was 20,000. Only that will be calculated. Why, sir? Why? Because only in that the profit portion is there. Raw material we are purchasing from someone else. He is not our department, he is not our branch. There is no possibility of we reversing his profit. He will reverse in his books. We are least bothered. But as these two departments are also there in our books, we are going to adjust them. One is raw material portion. Out of the total, one is raw material. The other one is other manufacturing expense. So out of the total expense, out of the total available closing stock, you can allocate 75% towards a raw material and 25% towards a manufacturing. Here they have given. Manufacturing department consists of 25% manufacturing expense, 75% of raw material. So raw material is how much, sir? Raw material is how much? 20,000 into 75%, which will come to rupees 15,000. So selling price of raw material in closing stock is equal to rupees 15,000. Okay. So how we arrived at a selling price? They are telling what? Raw material department earned a gross profit of 10%. Gross profit of 10%, which means unearned profit of opening stock. Opening stock was 15,000. Upon that, last year 10% was the preceding financial year's profit. So rupees 1,500. Stock reserve comes to rupees 1,500. This is on opening stock, right? 1,500. This is what, sir? Opening stock. And also from closing stock we have to eliminate 2 stock reserve. Okay. Working note number 2. Computation of stock reserve in closing stock. How to compute? Simple. How much is the total available? Total available is closing stock. 24,000 is what total available, right? 24,000 it is. Okay, sir, 24,000. Out of 24,000, 25% will go towards manufacturing expense, 75% will go towards raw material. 75%, 25%. This is what, sir? This is manufacturing expense. Whereas this is what, sir? This is raw materials. As the manufacturing expense will be there in the cost, we are least bothered about how much profit portion is included in that. We are bothered about how much is the raw material which is pending and how much is that. So 24,000, 75% will come to 18,000. Raw material rupees 18,000. Now how much is the stock reserve? Earlier we directly applied 10% because 10% they have given here in the question. but current year profit they haven't given. Current year gross profit they have not given. So how much is the GP ratio of raw material department? We have to compute. GP ratio of RM department, raw material department, is how much, sir? How much is the actual GP, guys? How much is the actual GP raw material is earning? 1,60,000, right? Yes, sir, 1,60,000. This 1,60,000 is earned by the sale, which is interdepartment as well as interdepartment, because both the profit are included. How much is the sale? Sale is 880. Also, how much is the transfer? Transfer is 120. Sale is 880. Also, transfer is 120. That is also our cost only, no? That is also our, sales only. So, 160,000 divided by 10 lakh. It is 16%. 16%. Okay. Stock reserve in closing stock. How much is the closing stock? Closing stock of raw material is 18,000. Out of that 18,000, 16% is what? 16% is a unearned profit, unrealized profit. Okay. How much is it? It is 18,000 into 16%, which will come to rupees 2,880. Rupees 2,880. Am I audible now? I'm audible, right? So can you please tell me where you lost me? Whether completion of question was, until completion of question, am I audible? I was audible or not? Yes. Okay. So my what I asked is later, is there any doubt in this particular question, whether you people understood or not? Understood. Okay. Working note, madam. Listen. They are telling for the manufacturing department, goods is going from the raw material. Now raw material department last year they kept a 10% gross profit, which means out of the closing stock of the material in the out of the opening stock of the raw material of the manufacturing department will consist of the profit portion. So we have to eliminate it. Opening stock was 20,000, out of which 75% is raw material, 25% is other manufacturing expense. We are least bothered about other manufacturing expense because that will be at cost only. Now coming to the raw material, in raw material, that is raw material was 75% of the total closing stock. Raw material was 15,000. In raw material, how much was the profit portion? Profit portion was 10%. That we are going to show it as a stock reserve in the debit side, opposite side of the opening stock. Okay, done. Later, next year, that year only, there is a closing stock of 24,000. Closing stock of 24,000. So out of closing stock, 25% is material, 75% is 75% is raw material, 25% is manufacturing expense. So 75% of 24 lakh came to 18,000, right? 18,000, sorry, 18,000, no? 18,000. So out of this 18,000, there was certain portion of unrealized profit. That how much we didn't know. Sir, we can apply 10% directly? No. 10% was of previous year. This year's we don't know. So this year's gross profit we calculated. How to calculate the gross profit, sir? Gross profit divided by sales. Here sales not only means that what is sold to the outsiders, but as you are selling your goods at a selling price to even your department also, that is also considered as a normal sale. So normal sale was 880, departmental transfer was 120, and gross profit was 160 in the raw material department. So raw material department this year made a gross profit percentage of 16%. We have to eliminate that 16% from the 18,000 to get at to arrive at a cost of the raw material. So how much was the stock reserve? Stock reserve was 2,880, that we debited, and the balance we transferred to the capital as it is whole organization's profit. Hope now it's clear. Is it clear, madam? Working note, or you want me to explain once again? Fine. Guys, take a screenshot. Screenshot number 1. Screenshot number 1. Screenshot number 2. Screenshot number 2. Screenshot number 3. Screenshot number 3. Screenshot number 4. Screenshot number 5. Screenshot number 5. Okay, go through the question. Okay, go through the question and answer. 2 minutes I will give. Go through the question and answer. And if you get any doubt, please let me know. Okay. Fine. Fine. Any doubt? No doubt? If no doubt, we can proceed. Shall we proceed then? Hello? Yes. Fine, 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 fine. Going to the illustration number 16. Illustration number 16. A and Co has two departments, P and Q. Okay. A and Co has two departments, P and Q. Department P sells goods to Department Q at a normal selling price. So P ಯಾವ ರೇಟ್ ಅಲ್ಲಿ ಕಳಿಸ್ತಾ ಇದ್ದಾರೆ Q ಡಿಪಾರ್ಟ್ಮೆಂಟ್ ಗೆ, they are sending it at a normal selling price, not at a cost price, not at a cost plus profit, normal selling price. From the following particulars, prepare a departmental trading and P&L account for the year ended 31/3/2022 and also ascertain the net profit to be transferred to the balance sheet. Okay, sir. They have given opening stock 5 lakh and nil, purchases they have given, goods from P they have given, wages they have given, traveling expense they have given, closing stock at cost to the department they have given, cost to the department, cost to the department, cost to the department. Okay, cost to the department. It is not at cost, cost to the department. For department Q, whatever the price at which P sends, no, that itself is a cost. Sales they have given, printing and stationery they have given. The following expenses incurred for both the departments were not apportioned between the departments: salaries of 33,000, advertisement of 120,000, general expense of 500,000, depreciation to charged 30% on the machinery worth rupees 96,000. The advertisement expense of the department are to be apportioned in the turnover ratio. Salaries and depreciation are to be apportioned in the ratio of 2:1 and 1:3 respectively. General expenses are to be apportioned in the ratio 3:1. Simple. Go through the question. We'll explain. Go through the question. Go through the question, guys. We'll see. Go through the question. Okay, shall we start? People, shall we start? Yes. Simple. First we will start with the trading account. Okay, boss. Trading account, there is an opening stock of 5 lakh and a nil. So trading account, opening stock of 5 lakh and a nil. Okay, 5 lakh and nil. Okay, sir, done. Next, there is a purchases of 28 lakh and 3 lakh. Purchase of 28 lakh and 3 lakh. Okay, purchase of 28 lakh and 3 lakh. Next, goods from P to the Q 8 lakh. So in the P it is sale side, in the Q it is purchase side. So goods from P, debit side in the Q and credit side in the P. Credit side in the P. Done, sir. Wages 350, 200. Wages 350 and 200. Okay. Next, traveling expense P&L item. Closing stock at cost 8 lakh and 209. Closing stock 8 lakh and 209. Sales 30 and 2 lakh or 20 lakh it is. 30 and 20 lakh. So 30 lakh, 20 lakh. Total sale is 50 lakh. Okay. Done. Printing and stationery will come in P&L. So we can find out a gross profit now. Right? So department P total is how much? 30 plus 38, 46 lakh. 46 lakh in the debit side. Debit side total is how much? 5 lakh plus 28,000, 28 lakh will come to 33 lakh, 3650, 37, 46. Okay, so 950 is a gross profit. In the department Q it is 2209 In the credit side, debit side it is 3 plus 8, 11, 11 plus 2 comes to 13. 13 minus 2209 will come to 909. Okay, done. So this the same gross profit has been carried down to the P&L of the departments. The same gross profit has been carried down to the P&L of the department. Okay, sir, done. Later what we have? Later we have traveling expense of 20 and 160. Traveling expense of 20 and 160. Done. Later what we have? Later we have 30,000 of printing stationery, 25,000 of printing stationery. 30,000 and 25,000. Done. Next, salaries of 33,000 is there. They are asking us to apportion salaries in the ratio of 2:1. 2:1. So 33,000 in 2:1 is 22,000 and 11,000. So to salaries, in the question kindly correct it as 33 lakh. Okay, sorry, 3,33,000. They gave it as a 33,000. Kindly make it as a 3,30,000. Done. Next, there is an advertisement expense of 1,20,000. They are asking advertisement expense on the ratio of turnover, it seems. If they don't give, also we have to compare we have to do in that way, that only. So how much it is? 30 lakh and 20 lakh, which is 3:2. The advertising expense of 120 should be apportioned in 3:2. So how much it is? 24, 48, 72. 72 and 48. 72 and 48 is a advertisement. 72 and 48 is a advertisement. Next, what is there, sir? Give me a second. General expense of 5 lakh is there. General expense of 5 lakh. General expense to be apportioned in the ratio of 3:1. So basically it is 375, 125. General expense 375 and 125. Okay, done. Next is what? Depreciation is to be charged 30% worth 96,000. So 96,000 into 30% is a depreciation. 96,000 into 30% is a depreciation. $28,800. This is whole organization depreciation. This should be split in A and B, or department P and Q, in which ratio they are telling salaries and depreciation are to be apportioned 2:1 and 1:3 respectively. So 2880 should be apportioned in this ratio. Which ratio? 1:3. $28,800 divided by 4, 7,200 and 7,221 600. Okay, 7,221 600 depreciation. 7,221 600. With the help of this we can find out a net profit, that is 228,800 and 419 400. 419 400. Now the question comes, sir, is there any adjustment in the stock reserve? Yes, there is an adjustment. Why, sir? Because P is sending a goods to Q at a normal selling price. P is sending a goods to Q at a normal selling price. Yes, sir, normal selling price only. So there should be some portion of unearned profit element in the Q's stock. So how much is Q's closing stock? Q's closing stock is 209,000. Q's closing stock is 209,000. So can we apply the percentage on this? No. Why? Because there is a separate purchase from Q. Even Q is making some material purchase. even Q on its own is making some material purchase. So we have to apportion out of the closing stock how much is departmental transfer goods, how much is departmental transfer goods, how much is purchases, how much is purchases. Okay, in a proportion we will take, in a proportion how much is a goods transferred from the department, goods transferred from the department 8 lakh, purchased is 3 lakh. So departmental transfer is how much, sir? 2,09,000 into 8 lakh is what departmental transfer, divided by total is 11 lakh. No, total is 11 lakh. At the same way, how much is of purchases? 209,000 into 3 lakh divided by 11 lakh. Because the purchase which you are making from outside, doing from outside, that is at cost itself. The purchase which you are doing from outside is at cost only. Only the purchase which you are making from the other department, in that the other department's profit portion is included, which is not yet realized because it is not yet sold. So basically 209,000 into 8 divided by 11, 152,000. 152,000 out of 209 is departmental transfer, and 209,000 into 300 divided by 1100. Two lakh 9,000 into 3 divided by 11, 57,000. 57,000 is what of purchases. Now in this we know that there is a profit element. In this there is a profit element, as there is no opening stock, only in closing stock profit element is there. But how much is a profit element, that we don't know. So what we should do, we should compute the gross profit ratio of department P. We have to compute the gross profit ratio of department P. How much is the gross profit of department P? 9,50,000 is a gross profit of department P. Okay, how much is sales? Sales is 30 lakh plus 8 lakh, because even goods is transferred at a selling price, no, so it is treated as just like sales. Name we might give different name, but finally the effect is of sales in the book. Divided by 38, 25% is what? 25% is GP ratio. Gross profit ratio is 25%. So stock, how much we computed? Stock somewhere we computed and kept, no, stock 152. Out of 152,000, 25% is what? Unrealized profit. Stock reserve for so much portion. Rupees 38,000. So this is general P&L. See, net profit we bought to 645,200. From that, stock reserve of 38,000 has been eliminated. At the end of the day, for capital we are transferring 607,200. For capital we are transferring 6,07,200. Guys, tell me, is there any doubt in this particular question, or anyone want me to repeat any points in this particular question? Please let me know. Is it clear, or you want me to explain any point? Working note. Basically that is of stock reserve, no sir? Stock reserve, no? Okay, listen. Is there any opening stock? Is there any opening stock in the books of, I mean, in the queue? No, right? No, nil. Opening stock is nil, which means there is no stock reserve in the opening stock. Because P is what sending, Q is receiving. If any stock reserve is there, then it should be in the book of P only. Q only. So it is not there. Fine. Next, closing stock. Closing stock. Closing stock is how much, sir? Closing stock is 2,09,000. Closing stock is 2,09,000. Now listen one thing, sir, carefully. Your dad gave you 20 chocolates. Your dad gave you 20 chocolates. Your mom gave you 15 chocolates. Same chocolates, okay? Your dad gave you 20 chocolates, your mom gave you 15 chocolates. Now let us assume 8 chocolates are pending. 8 chocolates you haven't had. So tell me whether this 8 chocolates is given by your mom or is given by your dad. Whether those 8 chocolates are, whatever the remaining chocolates are there, no, those are the chocolates which are given by your mom or given by your dad. Who gave it? Don't know, right? Don't know who gave it. That's why what we will do, out of this 8 we will proportion it. We will proportion it in the ratio which they gave. In the ratio which they gave, that is 20 chocolates given by mom, 15 dad, 15 chocolates is given by mom. So 8 into 20 by 35 total chocolates available in that. 8 into 15 by 35. So 8 into 25 35, 20 by 35, or do one thing, let us assume 7 chocolates are pending, okay? For simple of calculation, 7 chocolates are pending. So 7 into 25, 20 by 35, so how much it is? 1, 5, 4. 4 chocolates are given by your dad and 3 chocolates are given by your mom. In the same way, closing stock is showing how much? Closing stock is showing 2,09,000. Do you think whether this goods is completely received from the P is there, no? Whatever received from the P, only so much is left unsold? Not really. Why, sir? Because even these people are purchasing it from the market, no? Even these people are purchasing it from the market. So we will ascertain how much is purchased from the market and how much is transferred from the interdepartment. Because unrealized profit will be there only to the extent of interdepartmental transfer. Because for other things, it is our cost only. Complete thing is our cost. Only interdepartmental transfer it will be there. So this is interdepartmental. This is purchase. Okay. Tell me how much you transferred. Interdepartmental, how much you transferred? You transferred 8 lakh rupees. Okay. How much you purchased? You purchased 3 lakh goods. You purchased 3 lakh goods. So out of 209 pending, how much is interdepartmental? How much is interdepartmental? $152,000. So out of this 122,000, this is what closing stock portion of interdepartmental transfer. Okay. Now the work is not done. Now we got how much portion of the closing stock is acquired by interdepartmental transfer. Now we have to take out the loading available on that. So How to calculate? We should calculate the gross profit of the department which is sending. So which department is sending? Department P is sending. GP of P. GP of P. How much is actually the profit? Gross profit? It is 9,50,000. No? 9,50,000. Now this gross profit, whether it is arrived only after selling a goods to the customer? No, because even if your other departments are, you are sending it at a selling price only. So for them also you are treating like a outside customer. So they also, that also should be considered as sales only. So sales 30 lakh, upon that 8 lakh, 38 lakh. So it comes to 25%. So GP on profit is how much? 25%. So loading in closing stock portion of Q is how much? 152,000, right? Into 25%. Rupees 38,000. Rupees 38,000, that will be shown in the stock reserve. Rupees 38,000 in the general P&L. 38,000. At the end of the day, whatever the remains, that will be transferred to capital account. In the given case, it is 607,200. Hope it is clear now. Is it clear now, sir? Is it clear? Yes. Fine. So for everyone, is it clear? For everyone, is it clear? Yes. Do one thing, giving 2 minutes, just go through the whole question once, whole question and answer. 3 minutes I am giving. Till 3 o'clock, 4 minutes. Fine. Shall we proceed? Shall we proceed? Yes. Going to the illustration number 17. Going to the illustration number 17. A Limited manufacturing electronic components operates with two departments. Okay. A, which operates in two departments. Transfer made between departments of both purchased goods and manufactured finished goods. So transfer of both things will happen. That is, even if they purchase something, now the other department want that, they will transfer that also directly, purchased goods. Sometimes they will directly also they will transfer even produced goods also. Even they will transfer produced goods also. Okay. Goods purchased are transferred at cost and manufactured goods are transferred at a selling price, as in case of the open market. So if they are transferring the goods which they have purchased, then they are transferring it at a cost price. If they are transferring the goods which they have manufactured, then they are transferring it at a selling price. Okay sir, fine. Transactions for the year, they have given opening stock, sales, wages, purchases, closing stock. Closing stock they have given, luckily they have given closing stock separately. Purchased goods, manufacturing goods. Okay, fine. The following were the transfers between Department X to Department Y. Purchased goods 6,000 and finished goods 20,000. And from Department Y to Department X, purchased goods 5,000, finished goods 35,000. Stocks were valued at cost to determine the department. Stocks were valued at cost to the department concerned. It is estimated that closing stock of manufactured goods of Department Y consists of 20% of the goods received from Department X. You are required to prepare a departmental trading account and A's trading account for the year ended March 31, 2022. Also, show the reconciliation of the profit ascertained from these accounts. Kindly go through the question. Go through the question. We'll start. Okay. Okay. Shall we start? Shall we start? Listen here, the moral of the story is something like this. There is some company called A. There is some company called A. Okay, sir, A. A is having two departments. A is having two departments, Department X and Department Y. Department X and Department Y. Listen very carefully. Actually, these people trade in two kind of goods. One is purchased goods, the other one is manufactured. One is purchased, the other one is manufactured. This also, one is purchased, the other one is manufactured. So we can understand that both are into manufacturing as well as purchasing. Now when they transfer the purchased goods, that is either from X to Y it might be, or it might be from Y to X. Transfer is happening from both the ends. Okay, both the departments are equally contributing. So we can say this is happening at a cost of purchase. This is happening at a cost of purchase, which means profit portion 0. Profit portion 0%. Okay, but when they are transferring a manufactured, either it is from X to Y or Y to X, they are sending it at a selling price. They are sending it at a selling price, which means profit element included. Profit element included. So far is it clear? Is the story clear? Is this much story is clear? Okay. If so much is clear, then good, we can proceed easily. Okay, listen. There is a opening stock of 20,000 and 15,000. There is a opening stock of 20,000 and 15,000. So two opening stock, 20,000, 15,000, X and Y. Okay, sir, done. Next is what? Next, there is a sale of 190 and 135. There is a sale of 190 and 135. So buy sales 190 and 135. Buy sales 190 and 135. Okay, done. Next is what, sir? There are a wages of 12,500 and 7,500. There are a wages of 12,500 and 7,500 to the Department X and Department Y respectively. 12,500 and 7,500. Okay, sir. Okay. Understood. So far we understood. Done. Next, there is a purchase of 1,80,000. There is a purchase of 1,80,000. There is a purchase of 1,80,000. Done. Closing stock they are giving. X it is 2,000 plus 7,000, 9,000. Y it is 5,000 plus 8,000, 13,000. They have given a split between the goods which is purchased as well as manufactured. So X it is 2,000 and 7,000, Y it is 5,000 and 8,000. Done. Next, what they are telling? The following were the transfer from Department X to Department Y. So Department X to Department Y, which means for Department X it's kind of sales. which side you showed it? You have to show it in the credit side. Which side you have to show? You have to show it in the credit side. For Y it is kind of purchase, so you have to debit it. Purchase goods, X is transferring purchase goods of 6,000 and finished goods of 20,000. X is transferring purchase goods of 6,000, finished goods of 20,000. Try to understand here very carefully, listen what I am telling. The purchased goods of 6,000 is there now. The purchased goods of 6,000, adralli yavdu profit illa. There is no profit element in that 6,000 rupees because purchased goods are sent at a cost price. Purchase goods between each department will be transferred at a cost price. So there is no profit element in it. But at the same point of time, finished goods of 20,000 is there, no? Cost of that is not 20,000. Cost of that might be something else only. Because in the finished goods, the selling profit is included. Because finished goods, they are transferring it at a selling price. So in the books of X, in the column of X, what happens? By transfer, because it is considered as kind of sales, 6,000 plus 20,000, 26,000. In the books of or in the column of Y, it is to transfer, it is considered as purchase for him, 6,000 plus 20,000, 26,000. See here. By transfer, in the X column, 6,000, 20,000, 26,000. In the Y column, 6,000, 20,000, 26,000. Okay, next. Department Y is sending certain goods to Department X. So now Department Y is whom? Seller, transferor department. Department X is who? Department X is transferee department. Okay. Purchase goods of 5,000 and finished goods of 35,000. So again I repeat, purchase goods, there is no profit element in it. Purchase goods is sent at a purchase cost only. Purchase goods, we are not adding any profit element. Each department, both the departments are not adding any profit element. Okay, sir. So 5,000 and 35,000. So in the X it is purchase side, that is debit side. In the Y it is sales side because it is kind of sales only. So 40,000 each. 35,000, 5,000 in the X. 5,000 and 35,000 in the Y. Okay. After so much, what we got? After so much, we got departmental P&L. After so much, we got departmental P&L. Departmental P&L 52,500, 59,500. 52,500 and 59,500. Guys, tell me, so far, is it clear? Let's slowly go in this question. Slowly tackle this. So far is it clear? Guys? Yes. No doubt, no pakka. If you doubt idre eagle heli. If you have any doubt in this stage, please let me know this point of time only. We'll go one by one now. No doubt, no? Munde hogla? Shall I proceed? Okay. Next, they are asking A limited trading account. Listen very carefully. They are not asking general P&L account. They are asking trading account itself. So we have to prepare a trading account as a whole company. Trading account for the whole company. So opening stock will be how much? Opening stock will be 20,000 plus 15,000 because they didn't give a split and we don't know whether it's at a cost or what. So opening stock is 20,000 plus 15,000 which will come to 35,000. Okay sir, opening stock is done. Next there are purchases. No, 1 lakh plus 80,000 which comes to 1 lakh 80,000. Purchases 1 lakh 80,000. Transfers are there, sir. Transfers are there. One department debit, the other department credit. Again, in one more, the other department debit, one more department credit. Which means basically guys, what is happening is, as an organization as a whole, one department is receiving, the other department is sending. In the other case, the other department is sending, one department is receiving, which means there only it get nullified. As an organization as a whole, inside organization only it's moving. Why we want to keep separate entry? Inside organization only goods are moving. So there is no entry for the transfer. Okay. Next, wages are there, 12,500 and 7,500, which will come to 20,000. Okay. Next, closing stock, let it be. Closing stock, let it be. Tell me, is it clear so far? Tell me, is it clear so far? So far, is it clear? Yes, okay. Listen very carefully. Listen very carefully. Finally, at the end of the day, organizations, closing stock should be valued at cost or NRV, whichever is lower. I repeat, at the end of the day, organizations, closing stock should be valued at cost or NRV, whichever is lower. Now, as we are doing the organization trading account, we should eliminate any profit portion which is not yet realized now itself in the closing stock valuation itself. Closing stock, you should write it at a cost. Before that, I will simply tell one thing. Listen very carefully. Purchased goods, department X 2000 is there, department Y 5000 is there. However, in the purchased goods, there is no profit element only. I repeat, in the purchased goods, there is no profit element. So, whole 7000 we can take it into trading account. Whole 7000 directly, because there is no profit element involved in it. It is nothing but just a cost. It is nothing but just a cost. So in the trading account, purchased goods, I take 7000 directly. In the trading account, purchased goods, I take 7000 directly. Now, there is a manufactured goods in the X department, there is a manufactured goods in the Y department, right? There is a goods manufactured. Manufactured department X, manufactured goods Y. How much is closing balance? Closing balance is 7000 and 8000 is there. Rupees 7000 is there, rupees 8000 is there. Now listen very carefully, guys, very carefully. Out of this 7000, certain goods might be produced by the X only. Out of this 7000, certain goods can be produced by X only, manufactured by X only, which means that will always be at a cost. And also out of this 8000 of a Y, certain goods will be produced by Y only, which means always at a cost. At the same point of time, there might be a certain goods which is sent by the other department. I repeat, which is sent by the other department. So, okay sir, but separate act torsbeku. In purchase we didn't show separately because it is as good as purchasing at a cost, because they are sending it at cost only. Here they are not sending it at cost, they are sending it at a selling price. So, out of 7000, there might be a goods in which X produced, X's production, Y's production, X's production, Y's production. Okay, X's production and Y's production. Now listen carefully, very carefully. We'll go to question back. It is estimated that closing stock of a manufacturing goods of department Y, closing stock of manufacturing goods of department Y consists of 20% for goods received from department X. They are telling Y department is there, no? Y department 8,000 is there, no? Closing. Y department closing is 8,000. But out of that 8,000, 20% is from department X, it seems. 20% is of department X, it seems. %20 is department X. So actually they should have given it both the ways, okay? I mean, make it as here make it as, it is estimated that closing stock manufactured by goods of department Y and X consist of 20% for the goods received from department X and department Y. Make it like this, department X and department Y, which means out of the total stock, 20% is out of the closing stock of a manufactured goods, 20% is the other department manufactured goods, remaining 80% is ours, which is at a cost. Okay, so X, there is 70% goods. Out of this 70%, 20% is Y's production. 20% is production of Y. So which will become rupees 1,400. X's production is how much, sir? 80% of 7,000, which is basically 6356 rupees 5,600. This is at a cost, okay? This 5,600 is there, no? That is at a cost price. Whereas this 1,400 is there, no? 1,400. This is not at a cost price, boss. This is at a cost plus Y's profit. Cost plus Y's profit. Or you can say it simple way, selling price of Y. That is not a cost, that is selling price of Y. At the same moment of time, here it is X's production in the Y's book is 20%. X's production in the Y's book is 20% of the closing stock. How much is the closing stock? 8,000. And Y, it is 80% is done by him only. Sorry, that department only. I don't know why I say him. This 80% is there, no? This 80%, it is given at a cost price only. Or this is there at a cost price because that is your own goods. Y department, Y goods. So it will be at a cost only. Now this is there, no? 20% of 8,000. It is nothing but selling price of X. Selling price of X. How much it is? How much it is, sir? 20% of 8,000, which will come to 1,600. Which will come to rupees 1,600. Which will come to rupees 1,600. Okay. So tell me, guys, till this step is it clear? Everyone, till this step is it clear? Fine. Now the question comes, okay sir, what we got now is the split of goods. Now to find out how much is the profit unrealized, don't you think we want a profit percentage? Yes, we want a profit percentage, selling profit percentage. Whether they have given? No. So X, GP of X GP of X is how much? See, out of the total gross profit, that is 52,500. Tell me this 52,500 is derived only from the normal sales? No, it is also derived from transfer of the manufactured goods. I repeat, transfer of manufactured goods. Sir, why not normal goods? Normal goods are sent at a cost price. Normal goods are sent at a cost price. Only finished goods are sent at a selling price. Now profit of X, how much, sir? How much is the total gross profit of X? It is 52,500. It is 52,500 divided by normal. Some other entity was there, no? From other, for other people we sold, no? How much? 190,000. That will come 190,000 plus we are sending two kind of goods to our other department. One is purchased goods, one is manufacturing goods. Purchased goods will be sent at cost only as per the question. Only manufactured goods will be sent at cost plus profit portion at a selling price. So your transfer of purchased goods will not be considered as a sale. Only transfer of finished goods will be considered as a sale. How much is transferred by X? 20,000 is transferred by X. So 1,90,000 plus 20,000. 52,500 divided by 210, which is 25%. Now if we find out GP of Y, $59,500 is a GP. Okay, how much is a normal sales? Normal sales is 135. Normal sales is 135 plus how much is the sale of finished goods? It is 35,000. It is 35%. Here it is 35%. Okay. Now we will calculate how much is unrealized profit. Unrealized profit in X stock. How much X is holding closing stock? Closing stock of X is 7,000, but whole 7,000 you can't apply because out of 7,000 80% is theirs only, that is at cost. The remaining 1,400 is there, no? On that you can apply. So 1,400 into, it is sent by whom? Tell me guys, it is sent by whom? It is sent by Y. It is sent by Y, right? So how much is the Y's profit portion? It is 35%. $490. Now unrealized profit in Y's stock. So how much is the closing stock in the Y? Closing stock in the Y is, I mean only to the extent of how much is received from X? It is 1600 rupees. 1600. How many percentage? X is keeping a profit. How much is the excess profit? X is keeping a profit of how much? X is keeping a profit of, we somewhere we calculated, no? Here only. X is keeping a profit of 35%. Sorry. X it is 25%, not 35%. GP ratio is 25%, no? $400 is the total stock. So all together, how much is the stock reserve? Stock reserve is equal to rupees 490 plus rupees 400. Now, out of the closing stock available, how much is the closing stock available? Closing stock available is 2000 plus 7000 plus 5000 plus 8000 minus 490 plus 400. So it is 21,000, 22,000 minus 90. 22,000 minus 90. How much it is, guys? How much it is? 22,000 minus 90. 21,910, right? It is 21,910. You can write that way, or you can do one thing, as you have already mentioned, how much is the purchase value? Purchase value you have taken directly, no? I asked you people to take it directly, no? Here. $7,000. The remaining is there, no? From that we will reduce the stock reserves. So 7,000 plus 8,000, total 15,000 was there. Total 15,000 was there. Out of that, 400 is going plus 490 is going. $15,000. Oh, I just added 15,000 minus 400 plus 490. $15,090 it is. That's it. No, it should be 14. Give me a second. It should be 14,910. It should be 14,910. Okay. Okay, so done. $7,000 plus 8,000, 15,000 minus 890. Yeah, 14110 it is. So 14110 will come here. 14110. Finally, whatever there is, that is a balancing figure, which will go to gross profit. That's it. Simple it is. Yes, 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 people. Is it clear? Is it clear? Is it clear? Is it clear? Is it clear, people? Everyone? No doubt? Pakka no doubt now? Fine. Fine. We'll do one thing. We'll take a break now. We'll take a break of around 13-14 minutes, and we will continue with illustration number 18. Okay, there are 3 more questions, I feel. Yeah, illustration 18, 19 and 20. 3 more questions are there. Fine. Next session we will wind up that, and we will start with new chapter later. Fine. So shall we take a break now? Yes. Session will be same. Okay, I am not ending the session. Hello, shall we start? Shall we start? Shall we start, people? Yes. Fine, fine, fine. Had your coffee, tea, Horlicks, Bonvita? And some people have habit of having nothing. How many of you don't have coffee, tea, nothing? Slept one round? Posh, sir. Power nap in 20 minutes. Great, no? Luckily you woke up. Thanks for that. Yeah, 10 minutes power nap. Posh. Capital Rama. Actually, power naps are important in between. It energizes you, right? The thing is, after that you should be able to wake up. That's the only thing. If you are having control over your mind, control over your body, you can have control over anything in the life. So try to keep control over your mind and body. It should wake up when you want to wake up. Your mind should concentrate when you want it to concentrate. Train your body and mind in that direction. Okay, proceeding further. Illustration number 18. Illustration number 18. Illustration number 18. Okay, sir. Samudra and Co. Samudra and Co., a partnership firm, has 3 departments, K, L and M, which are under the charge of partners B, C and D respectively. So K is looked after by whom? B. L is looked after by whom? C. M is looked after by whom? D. The following consolidated P and L is given below. So consolidated P and L they have given below. Okay. Opening stock 81,890, purchases 265,700, salaries and wages 48, rent expense 10,800, selling expense 14,400, discount allowed 1,200, depreciation 750, sales 4 lakh, closing stock 89,000, discount received 800, and net profit 67,060. Okay, they have given certain notes relating to all these things. 1. From the following above account, the following additional information, prepare the departmental P&L account for the year ended 31st March 2013. Here they have given when? Here they have given 2022. See here. In answer, they are writing it as 2022. Here in Jatre, here they are asking 2013. Kindly make it as 2022. Breakup of the opening stock is K 37,890, L 24,000, M 20,000. Total purchases were as under: K 14700, L 8600, M 44,400. Salaries and wages include 12,000 wages of Department M. The balance salary should be apportioned to the three departments in the ratio of 4:4:1. Okay, salaries and wages. Rent is to be apportioned in the ratio of floor space, which is 2:2:5. Selling expense and discount allowed are to be apportioned in the ratio of turnover. Depreciation on assets should be equally charged to three departments. Sales made by three departments were 180, 130, 90. Breakup of the closing stock department wise: 45,100, 22,300, 21,600. The closing stock of the Department M includes 5,700 goods transferred from Department K. However, opening stock doesn't include any goods transferred from other departments, which means there is no opening stock reserve, right? There is no need to credit the stock reserve. Okay. Department K and L sold goods worth rupees 10,700 and 600 respectively to Department M. Okay. Discount received are traceable to Departments K, L, M as 400, 250, 150 respectively. Partners are to be shared a profit as under: 75% of the profit of Department K, L and M to the respective partner in charge. Balance profit is to be credited in the ratio of 2:1:1. Kindly go through the question, guys. We will start. Kindly go through the question. Kindly go through the question. We'll start. Fine. Listen here. Listen. Opening stock is there. They have given a split 37,890, 24,000, 20,000. So, two opening stock, 37,890, 24,000, 20,000. Okay, sir, done. Next is what? Next, purchase is there 265,700. Purchase is there 265,700, which is basically 140,700, 80,600, 44,400. 140,700, 80,600, 44,400. Done. Next, there is a salaries and wages. They are telling salaries and wages include 12,000 wages of Department M. So, out of 48,000, you can divide it into two. One is wages, the other one is salary. In the wages, it is 12,000. So, salary should be 36,000. Okay, sir. Wages of whom? Wages, they particularly telling this is of M. This is of Department M. Okay. The balance salary should be apportioned to the three departments in the 4:4:1. So, this is what? This is trading account. This is trading account. This is P&L item. Salary is a P&L item. And upon that, it should be shared among three departments in the ratio of 4:4:1. 4:4:1. So 36,000 divided by 9 will get 4,000. 4,000, 16,000, 16,000, 4,000. 16,000, 16,000 and 4,000. But for the time being, you take only this. Wages 12,000. Which column? M column. Two wages M 12,000. Two wages M 12,000. Okay, sir. Done. Done. Next, rent and expenses are there. Rent and expense P&L item. Selling expense P&L item. Discount allowed P&L item. Depreciation P&L item. Sales is there 4 lakh. 4 lakh sale is there. They have given adjustment here. K180, L130, M90. So buy sales K180, L130, M90. M90. Done. Next, what they have given? Closing stock they have given 89,000. Closing stock of 89,000. Split they have given. Here it is. 45,100, 22,300, 21,600. 45,100, 22,300, 21,600. 45,100, 22,300, 21,600. Done. The closing stock of Department M includes 5,700 goods transferred from Department K. However, opening stock doesn't include. Here they are talking how much is remaining. Don't think that only 5,700 is transferred. No. So much goods is transferred. Out of that goods, in the closing stock, only 5,700 is there. I repeat, so much goods is transferred. Out of that goods, only 5,700 is there. Okay. Now, how much is transferred? Department K and L sold 10,700, 600 respectively. So, Department K 10,700, Department L 600. So, transfer, who are senders? That is who the transferor is K and L, 10,700, 600. Who is a transferee? Only one department, that is M. 10,700 plus 600 comes to 11,300. Okay, done. Any other things? No. So we can find out a gross profit now. Gross profit is 57,210, 48,300, 23,900. 57,210, 48,300, 23,900. So tell me now, is the trading account clear? People, trading account clear? Or any doubt in trading account? Hello. Clear? No? No doubt? No? Pakka? Good. Now, if there is any doubt, please don't hesitate to ask. Okay, yeah. Wait, let me look at your faces. I have never seen your faces. Can you turn on your cameras? Let me see your faces once. Can you turn on your cameras, guys? Hello? Hello, hello, hello. Can you turn on your cameras? People slept or what? Hello? No one is. What is this? For you people, it's okay if I also keep my camera off. ಸರ್ ಏನು ಕ್ಯಾಮ್ರಾ ಆನ್ ಸರ್, ಮಲ್ಕೊಂಡು ನೋಡ್ತಾ ಇದ್ದೀವಿ ವಿಡಿಯೋ ಸುಮ್ಮನೆ. ಓಕೆ, ಲಾಸ್ಟ್ ಸೆಷನ್ ವಿಲ್ do one photo session with the cameras on. Okay, nowadays photo session is simple, screenshot. By gross profit 57,210, 48,300, 23,900. Okay, now P&L items we have to bring. No, P&L items we have to bring. Okay sir, which are the P&L items now? Salaries was 16,000, 16,000, 4,000. P&L item 16,000, 16,000, 4,000. Salaries 16,000, 16,000, 4,000. Done. Next, rent expenses 10,800 is there, and they are telling rent is to be apportioned in the ratio of 2:5. So rent expense is how much? Rent expense is 10,800. 10,800 divided by 9, which will come to 1,200. 1,200 to 2,400, 2,400 and 6,000. 2,400, 2,400 and 6,000. Rent 2,400, 2,400 and 6,000. Okay, done. Next, selling expenses and discount allowed are to be apportioned in the ratio of time ratio. Will come one by one. So selling expense is there, 14,400. What they are asking, sir? It should be apportioned in the ratio of turnover, it seems. So how much is the ratio of turnover? Ratio of turnover is somewhere here. Here it is. Ratio of turnover is how much? 18:13:9. 18:13:9 is the ratio of turnover. Okay boss. Selling expense should be apportioned on that ratio. Selling expense is 14,400. 14,400 in the ratio of 18:13:9. So it is 27 and 40. 14,400 divided by 40. 360 into 18, 6,480, comma, divided by 18 into 13, 4,680, comma, divided by 13 into 9, 14,000 divided by 13 into 9, 3,240. 3,240. Okay sir. So selling expenditure 6480, 4680, 3240. 6480, 4680, 3240. So selling expense is done. Next, what they are asking? Next they are telling discount allowed. Discount allowed, they are telling on the ratio of turnover again. How much is the discount allowed? It is 1200. So 1200 in the ratio of this 18, 13 and 9. So 18, 27, 40, right? 1200 by 40. 1200 by 40 is basically 300. No, 30. 30 into 18. 18 tens are 180, 180, 360, 360, 540. 540. 13 into 30. 260, 390. 9 into 30. 270. So 540, 390, 270 is your discount. 540, 390, 270. Discount. 540, 390 and 270. Done, sir. Next is what? Next, they are telling depreciation 750. Depreciation 750. Listen here. Depreciation on assets should be equally charged to 3 departments. So it should be equally charged, it seems. So 750. 750, if we charge equally, it is nothing but 250, 250, 250. Equally they are asking. So it is 250, 250, 250. Yes, sir. Okay, done. Next, there is a discount received of 800. There is a discount received of 800, sir. 800 is a discount received. Discount received are traceable to the department. 400, 250, 150. Directly they have given 400, 250, 150. After doing all these things, we can find out a net profit. Tell me, guys, so far is it clear? Tell me, so far is it clear? Any doubt? No doubt. Okay, great. Now we can go for, okay, now we can go for P&L appropriation. P&L appropriation, right? Because it's a partnership. We have taken a net profit into P&L appropriation, that is by profit brought down 31,940, 24,830, 10,290. 31,940, 24,830, 10,290. If you want, you can prepare a general P&L. From there, after adjusting the stock reserve, you can get the values to P&L appropriation also. Your wish. Okay, sir. Done. Now, listen very carefully. Listen very carefully. Listen very carefully. This point is important. They are telling what, sir? They are telling so many things. Breakup of closing stock department wise. K 45,100, L 22,300, M 21,600. The closing stock of department M includes 5,700 goods transferred. So all other department are there. No, K and L 45,100 and 22,300. That is of their own goods. Only in the M department 5,700 is the goods which is transferred from K. So M, department M. How much is the value of department M? Department M closing stock is rupees 21,600, sir. Okay. In this 21,600, you can divide the goods into 2. Okay. Stock into 2. Which are they? 1. Stock transferred from K. And own is the other one. So transferred from K. How much is transferred from K, sir? Out of the remaining 5,700 is what transferred from K. 5,700 is what transferred from K. So basically it is 15,900 is what own it is. 15,900 is own. Okay, done. Now 5,700 is fine. Now we have to check whether the goods which they are sending, departmental base, one department to other department, whether they are sending it at cost or cost plus certain percentage or selling price. Okay. If it's a cost, there is no adjustment for stock reserve. If it's at a cost plus certain percentage, that percentage will be the loading. If it is selling price, then we have to find out the gross profit and we have to apply it. Listen here very carefully. They are telling department K and L sold goods. Sold. Are you guys getting? Sold, which means it's at a selling price. They are not telling transferred at cost or transferred at cost percentage. No, they are directly telling it as sold. So 10,700 it seems. From the K and L it is 600. L, that doesn't matter. L value is there, no? It's of no use. Only K value is required because we know how much is the goods of K is remaining, one thing. Upon that we don't know how much is the percentage of profit of K. If we come to know the percentage of profit of K, we can apply that directly. Now we have to compute the profit of percentage of K. Profit of K. So simple it is. Gross profit of K is how much, sir? Gross profit of K is 57,210. Gross profit is 57,210 divided by this gross profit, whether he is earning only through sales? No, sir. Even department also he is selling at a sending at a selling price only, which means that also is contributing towards gross profit. So K it is 1,80,000 plus 10,700. 1,80,000 plus 10,700. This much is a total sales, boss. Paka. Now 57,210 divided by 190,700. 30% it is. How many percentage, sir? 30%. 30% is what the gross profit of X. Sorry, gross profit of K. Now loading is how much, sir? Loading is how much? Loading is 5,700 is what is there, closing stock, which is sent by K, and out of that 5,700, 30% is a profit portion. So basically 5,700 into 30%, you are going to get rupees 1,710. Rupees 1,710. Okay, sir. This is stock reserve. So stock reserve 1,710. So now tell me how much is pending? Pending money is total profit was 67060. From that minus unrealized profit of 1,710. At the end of the day, firm made a profit of 67,060 minus 1,710. That is 65,350. 65,350. Done. Next, what they are asking, sir? Listen here very carefully. Partners are to be share the profits as under 75% of a profit of department K, L and M to the respective partners in charge. Who are the respective partners? Respective partners are B, C, D. Respective partners are B, C and D. How much is the gross profit in each department? Gross profit in each department are somewhere we it's there, no? Or they are asking only profit or gross profit? They are telling profit. They are telling profit, which means not gross profit, net profit it is. Okay, net profit done by these departments. So how much is the net profits? 31,940. This guy is 31,940. This guy's department is 24,830. And this guy's department is 10,290. 10,290. Okay. 75% of profit. 75% of net profit. 75% of net profit means 31,940. 31,940 into 75%, sir. 75%, which will come to 23,955. 23,955. 24,830 into 75 percentage, it is 18,623. 18,623. Next, 10,290 into 75 percentage, it is 7,718. 7,718. Okay, sir, done. See here. Two partners capital account, B 23,955, C 18,263, D 7,718. 23,955, 18,623, 7,718. Okay, boss. How much later? What they are telling? Later they are telling. Listen here very carefully. Later they are telling balance profit to be credited in 2:1:1. So we have to find out how much is the balance capital. First tell me how much is the firm's net capital. Sorry, net profit. Firm's net profit. Firm's net profit. Don't tell me that it is 67,067. 67,060. Out of 67,060, there is a loading of 1,710, which is not realized. So the firm's profit for the period is just 67,060 minus 1,710. 67,060, see, minus 1,710 comes to rupees 65,350. Out of 65,350, 23,955 is taken over by X B. 18,623 is taken over by C. 7,718 is taken over by D. So basically 65,350 minus 23,955 minus 18,623 minus 7,718, it comes to 15,054. So the balance which is remaining is 15,054. This 15,054 should be divided among the partners in the ratio which they have given, and the ratio which they have given is 2:1:1. 2:1:1. So 15,054 divided by 4 into 2, rupees 7,527 divided by 2, rupees 3,764,3763. One guy has to get less only. 15,054 minus 7,527 minus 3,764. 3,763. This shall be shared among the partners. This shall be shared among the partners. The remaining profit. Two balance, that is again two partners capital, B 7,527, C 3,763, D 3,764. 7,527, 3,764, 3,763. That's it. Now tell me guys whether this question is clear or not. People, is it clear? Any doubt? No doubt. Fine. Fine. Do one thing, giving 2 minutes just to go through the question. Just go through the question and answer, giving 3 minutes. Kindly go through the question, once revise actually what is happening in the question. Okay, okay. Shall we proceed? Shall we proceed, people? Shall we proceed? No, na. Yes. Okay. Illustration number 19. Illustration number 19. The following details are available in respect of a business for a year. Department X, Y and Z. 3 departments are there. opening stock 120 units, 80 units, 152 units. Purchases during the year 1000 units, 2000 units, 2400 units. Sales X 1020 units at rupees 20 per each 1920 units at rupees 22.5, 2496 units at rupees 25. Okay sir. The total value of purchase is rupees 1 lakh. How much is the total value of purchase sir? Total value of purchase is rupees 1 lakh. It is observed that the rate of gross profit is same in each department. It is observed that the gross profit is same in each department, it seems. Prepare a departmental trading account for the above year. Fine. Go through the question and try, like, just analyze how we can arrive at this, because hardly they have given a selling information, sale price, and they have given purchases, purchase split also they haven't given. What to do? Just to go through the question and try to analyze. Please don't see the answer. Please don't see the answer. Kindly read the question carefully and analyze what we can do to arrive at an answer. That is, we want purchase value, we want closing stock value, we want opening stock value, sales though they have given. What to do, we don't know. Just go through the question. Okay. Anyone is having any idea, please share. Have you people got any idea what we can do? Something like that. Have you people got any idea how we can do this or what we can do? If yes, please share your idea. Giving you 2 more minutes to analyze and share your idea. Fine. So as none of you gave any idea, I will only come up with one idea. Listen very carefully. They are telling gross profit of each department as same. They are telling gross profit of each department same, it seems. Okay, great. Same, good for them. And also listen very carefully. They have given a total purchase value. Per unit they haven't given. But they have given a total purchase value. We know the total sales value for some items and we know the total purchase value. Don't you think we can find the profit? So for 1000 units, 2000 units and 2400 units, we have to find out the sales first. Sales of purchased units. Sales of purchased units. Okay, X. How many units purchased? 1000 units purchased, sir. 1000 into 1 unit is sold at what price? 1 unit is sold at 20 rupees. I know actual sales is 1020, but here we know the purchase cost only to the extent of 1000 units, only to the extent of 2000 units, only to the extent of 2400 units, which means we have to compare the actual number of that number of units only, no? Only that number of units we can compare. We can't take the total sales to find out the profit. Okay. Now how much it is, sir? How much it is? 1000 into rupees 20 will come to rupees 20,000. Okay. Y it is now. Y, how many units are purchased, sir? 2000 units are purchased. 2000 units are purchased. At what rate in Y we are going to sell? We are going to sell rupees 22.5 per unit, no? We are going to sell at a rate of 22.5 per unit. So 2000 into 22.5 will come to rupees 45,000. Will come to rupees 45,000. Done. Z is there. How much would be the Z? 2400 is what we purchased. 2400 is what we purchased, and per unit at what price we are going to sell? At the rate of 25. So 2400 into 25 is how much? It is 60,000. Rupees 60,000. Okay. Total sales is how much now? Now tell me what is the total sales. I mean total sale of a purchased units is 20,000 plus 45,000 plus 60,000, which will come to rupees 125,000. Rupees 125,000. This is sales value. Sales value minus cost for the same. To purchase so much, how much we are spending, sir? We are spending 1 lakh rupees. Purchase value is 1 lakh rupees, sir. 1 lakh. Okay, 1 lakh. So how much we are going to get as a profit? We are going to get 25,000 as a gross profit. This is not actual gross profit, okay? This is not actual gross profit. We are trying to find out a gross profit percentage. Therefore, gross profit percentage is equal to, as they have given, all the department gross profit is same. Gross profit percentage is equal to 25 lakh divided by 125,000. 125,000. So it is 1 by 5. 1 by 5 is nothing but 20%. It is 20%. So GP percentage is 20%. Guys, tell me whether computation of GP percentage is clear for you or not. If no, please let me know, I will explain it again. If yes, we can proceed. Is the computation of GP is clear? If yes, we will proceed. If no, I will explain it again. Okay, done. So now we know the opening stock, we know the purchases, we know the sales, but we don't know the closing stock. So computation of closing stock. Computation of closing stock. When you have a opening stock, you also purchase. What you will get? You will get goods available for sale, right? When you add purchases with the opening stock, what you are going to get? You are going to get goods available for sale in that particular period. From that, if you reduce actual sales, if you reduce sold units, what you are going to get, sir? You are going to get closing stock. You are going to get closing stock. Okay. Now each department we will go. Department number X. How much was the opening stock? Opening stock was 120. Okay, sir. Opening stock was 120 plus. How much was the purchase? Purchase was 1000 units. Purchase was 1000 units. Okay. Minus. How much is the sold? Sold is 1020. Sold is 1020. So how much is the closing units? 120 plus 100 comes to 1120 minus 1020. Closing stock is 100 units. This is in units, okay? So 100 units. Okay, sir, done. 100 units, done. Next, Y. How much was opening of Y? 80 units were opening of Y. Plus, how much was purchase? Purchase was 2000. Minus, how much is sold? Sold is 1920. 1920. So 80 plus 2000 comes to 2080 minus 1920, which is basically 160 units, right? 160 units. 2080 minus 1920. 80 plus 80. 160 units. Next is a Z, boss. Z. Okay. Z. So Z is how much? Z is how much? Z is how much? Z, how much was the opening stock? Opening stock was 152 units. Okay. Opening stock was 152 units plus how much is the purchase number of units? Purchase number of units is 2400 units. Purchase number of units is 2400 units. How much is the sold units? Sold units is 2496. 2496. So basically 152 plus 2400 will come to 2552 minus 2496. So basically it is 552 minus 496, which is 56. 56 units. 56 units. Okay, sir, done. Done. Now everything is fine, sir. We got to know how much is the closing stock units. We know how much is opening stock unit. We know how much units we purchased. But we don't know what is the purchase price per unit. We don't know what is the purchase price per unit. That only we have to multiply with opening stock and closing stock. No? Yes. So we will compute a computation of purchase price per unit. Computation of purchase price per unit. What do you mean by purchase price, sir? Simple. Selling price minus gross profit will give you what, sir? Selling price minus gross profit will give you, of course, purchase price. I mean, it will give you a cost of goods sold, but other than purchase cost there is no other cost, so I will directly write it as purchase price. Okay, tell me how much is the selling price per unit of X. We will start with X. So how much is the X? It is 20. Okay, sir. 20 minus gross profit percentage. How much we computed? 20% only, no? 20 minus 20%. So which is basically rupees 16. Purchase price is rupees 16. Okay. Y is selling a unit at rupees 22.5. Rupees 22.5 minus 20%. So is it 19 or something? 22.5 minus 20%. 18 it is. Okay. Rupees 18. Okay, sir, done. Give me a second. I don't know why it is today. My tab is acting bit weird. Next is Z. Unit is sold at what price, sir? Unit is sold at 25 minus 20%. The purchase price is rupees 20, sir. Purchase price is rupees 20. Okay. Now value of opening stock. Wait, let me write particulars. X, Y and Z. Value of opening stock. Unit into purchase price. How many units were there in X? Opening number of units. Opening number of units in X is 120. 120 into what is the purchase price? It is 16. 120 into 16. 1600 plus 32. 1920, right? Opening is 1920. X rupees, Y rupees, Z rupees. Okay. How many units are there in Y? Number of units are there in Y is 80. Per unit how much it is? Per unit it is 18. So 80 into 18 is basically 80 into 10 is 800. 1600 minus 160. 1440. Why it is rupees 1440. Okay. Next is Z. How many units? 152 units were there. So 152 into 2. 1520 into 2. 3040. Z it is 3040. Okay, sir. Value of opening stock is done. Value of purchase. Again, units into purchase price. So how many units are purchased in A? X it is 1000. 1000 into rupees 16, which will be 16,000. Okay, sir. 16,000 in X. Next, how many units were purchased in Y? 2,000 units. So 2,000 into per unit it is 18, which is basically 36,000. How many units were purchased in Z? 2,400. 2,400 into 20, we will get 24, 48,000. 48,000. Done, sir. Done. Next, value of sales. Value of sales. Units into selling price. Units into selling price. Here, 1020 into 20. 1020 into 20, 1020 will give you 10,200, 20,400. So 20,400 in X. Okay. Here Y, 1920 into 22.5. 1920 into 22.5. 1920 into 22.5, 43,200, sir. 43,200. Okay, done. Next, 2496 unit at rupees 25. 2496 into 25, which is 62,400. 62,400. Now we want a closing stock value. Value of closing stock. Value of closing stock. Value of closing stock, again units into purchase price. So how many units are there? Closing stock 100 units in X. So 100 into rupees 16. 100 into rupees 16. How much will be the closing stock? 1,600. 1,600. How many units are there in Y? 160 units. What is the purchase price? 18. 160 into 18. 160 into 10 is 1,600. 1,600 minus 320. 1280, no? Wait, let me check. 18 into 160. 2880. Sorry. 3,200. Yeah. 2880. Fine. Next is what, boss? Next is what? Next is Z. Z 56 into 20. 56 units is a closing. Per unit it is 20. So it is 56 into 10 is 560. 560. 1,120. So it is 1,120. 1,120. Tell me guys whether so far is it clear? So far is it clear? People? Yes. Fine. Great. Now they are asking us to prepare a departmental trading account. That I am going to just put it directly over there. I am tired. And making column and all, of course it will take hardly 4-5 minutes, but I don't want to. How far you will see my bad handwriting? Better you see some printed handwriting. Of course hardly they will give a right answers without any mistakes. But yeah, let's see whether they have given it or not. In each and every question you can find a mistake. So 192014403040 done. 16,000, 36,000, 48,000 done. 20,400, 43,200, 62,400 done. 1,600, 2,880, 1,120 done. Profit 4,080 is 20,400 into 20%. We can check directly like this also. 20,400 into 20%. 4,080. Okay. 43,200 into 20%. 8,640 done. 6,2,400 into 20%. 12,480 done. Okay. That's it. Simple question. It's clear, right? You people know, right? Now what to do when they ask this kind of question? You have to find out the gross profit. To find out the gross profit, what you have to compare? You have to find out how much is the total sales value will be for the purchase number of units minus purchase cost for the purchase number of units. You are going to get the gross profit. Gross profit, if you divide by the sales which you have taken, you will get a gross profit percentage. From that sales value, if you might reduce the gross profit percentage, you are going to get the purchase value. Fine. Fine. Is it clear, right? Whole question is clear right now, people? How many times we should say yes, sir? You torture us. We can't open mobile phone. You can't write again, and we can't go back. You don't know our pain. But if you are using a laptop, it is very easy to write something in chat and go. If you are using tab, that also fine. Let it be. So take a screenshot of this. Screenshot number 1. Screenshot number 1. Screenshot number 2. Screenshot number 2. Screenshot number 3. Screenshot number 2. Screenshot number 3. Yes, sir. Done. Fine. Hope you people understood. Hope you people understood so far. There is one more question. There is one more question about a managerial remuneration. We'll see that too, so that we can wind up a departmental accounts with this particular sum. Later there are certain exercise questions of branch and department, that also we can look, and we can wind up this particular chapter. Okay, fine. Shall we see illustration 20? Hello people. Yes. Okay. Illustration 20. Measure auto garage consists of 3 departments. Oh my god, it consists of 3 departments, it seems. Spares, services, repairs. Each department being managed by a departmental manager whose commission was respectively 5%, 10%, 10% of the respective department profits. So each department is managed by the managers. Their commission is 5%, 10%, 10%. Spares department 5%, service department 10%, repairs department 10%. In the absence or inadequacy of profit, a minimum commission of 3,000 is to be paid to the managers. In case of no profit or profit is there, but if you multiply 5%, 10%, 10% with that profit, they are not getting 3,000 rupees. Then 3,000 is a minimum profit they are going to get. I repeat, let us assume now spares department made a profit of 30,000 rupees. Made a profit of 30,000 rupees. Now how much will be the commission? Commission will be 30,000 into 5%, which is basically 1,500. In this case, spares manager is entitled to 3,000, not the 1,500. Spares manager is entitled to 3,000, not 1,500. Okay. Sir, what if it is 60,000, or what if it is 80,000? 80,000 into 5% is 4,000. Then he is going to get 4,000, not 3,000. So minimum 3,000. Minimum guarantee is 3,000. Whether it is profit or loss, minimum 3,000 is going to get. His actual commission or minimum 3,000, whichever is higher. Actual commission or 3,000, whichever is higher. Okay. Now, Interdepartmental transfers of goods and service are made on the basis of a loaded price given as under. From spares to service 5% above the cost. From spares to repairs 10% above the cost. From repairs to service 10% above the cost. In respect of the year ended 31/3/2022, the book has already been closed and positions drawn. Subsequently, it was discovered that closing stock of departments had included a interdepartmental transferred goods at a loaded price instead of the correct cost price. From the following information, prepare a revised statement of recomputing the departmental profit or loss. Net profit or loss as per the accounts: spares 19,000 loss, service 25,200 profit, repairs 36,000 profit. Interdepartmental transfers included at a loaded price in the departmental stock: service 32,500, 10,500 from spares, 22,000 from repairs, repairs 2,100 from a spares. Okay, kindly go through the question. We will start. Kindly go through the question. Okay, okay, shall we start? Shall we start? Shall we start? Yes. See here, they are telling unrealized profit is there, no? That is not eliminated. Unrealized profit is not eliminated. We have to eliminate a unrealized profit, that's it. So, what we should do? We should go for the net profit first. From the existing point, we should go back to the net profit. There we should eliminate the unrealized profit. Then we will get a net profit after adjustment of the stock reserve. From that we have to give a commission and we have to come back. I repeat, we have to go back to the net profit. Okay. Later we have to adjust the stock reserve. Later we have to come back to the actual net profit. From that we have to give the commission. Okay. So fine. Listen how it works. How it works or how it works. Listen. I can say 3 departments. Particulars. Three departments are there, no? Spares. Next, what do you have? What do you have? What do you have? What you have? You have service. You have repairs. Okay. Now, we have to go back to our net profit before charging commission. There we have to adjust the stock reserve. Later we should give back the commission. So, now what is available with us? We have a net profit after adjustment of commission. We have a net profit after adjustment of the commission, right? Net profit after adjustment of commission. Net profit after adjustment of commission. Okay, sir. How much is there? How much is there? It is 19,000 loss. Nice. Spares 19,000 loss. Service 25,200 profit. $25,200 profit and repairs 36,000 profit. Repairs 36,000 profit. Okay, sir. What we should do now to arrive at a net profit before charging commission? We should add back the commission. We should add back the commission paid. Add back the commission paid. Do we know how much we paid? Do we know how much we paid? We don't know. We don't know. So we'll do working note number 1. Okay, sir. Working note 1. Computation of commission paid. Computation of commission paid. Who are they? First, we have 3 departments, no? Spares. First we will find out for spares. Spares. What it says? Spares 5% of net profit. 5% of net profit or rupees 3,000, whichever is higher. Whichever is higher. Now we have to find out how much is 5% of net profit. How much is 5% of net profit? We don't know how much was net profit before charging commission. Do we know how much was net profit before charging commission? We don't know. We don't know how much was net profit before charging commission, but the net profit after charging commission we know. Net profit after charging commission we know. Okay, how to arrive at that, sir? Listen. Net profit after charging commission is equal to net profit before charging commission minus commission. Okay, now do we know how much is the net profit after charging commission? Yes sir, of course we know. How much it is? Minus 19,000. Negative 19,000 is what it is. Negative 19,000 is equal to, how much is the net profit before charging commission? We don't know. Let's take it as a X. How much is a commission? How much is a commission? Commission is basically minus 0.05x, 5%, right? So X is equal to how much, sir? X is equal to minus 19,000 divided by 0.95. So X is equal to how much, sir? X is equal to how much? X is equal to how much? X is equal to how much? X is equal to 19,000 divided by 0.95. X is equal to 20,000. X is equal to negative 20,000. Okay. So guys, listen very carefully. As it's a loss. Commission paid to spares manager is rupees 3,000. Commission paid to spares manager is rupees 3,000. So 3,000 it is. 19,000 add back 3,000. So net profit before charging commission is how much? Net profit before charging commission. Net profit before charging commission is how much, sir? Net profit before charging commission is 16,000 here. 16,000. Done. Next who it is? Service. Next it is service. Same thing I will copy. Copy. it is service. It is not 5%, it is 10%. For service it is 10% commission, no? 10% of net profit. Okay. Okay. Now the thing comes, how much is a net profit after charging commission? How can it go like this? Whole PDF is missing, it seems. Luckily. What we have marked, everything is gone. Fine, no issues. So net profit after charging commission is how much? Service department 25,200. It is rupees 25,200. How much is net profit before charging? We don't know. Let it be y. Minus how much was the commission? 0.1y. Right? So y is equal to 25,200 divided by 0.9. 25,200 divided by 0.9. $25,200 divided by 0.9, 28,000 rupees. 28,000. Okay, boss. 28,000. On this commission is how much? Commission is rupees 28,000 into 10%, which will come to 2,800 or 3,000, whichever is higher. So commission is actually 3,000. Commission actually paid is 3,000. So again 3,000. So net profit before charging such commission was 28,200. 28,200. Done. Next is for which department? Next is for service repairs, right? Next is for the repairs. See, give me a second. I don't know why it's acting weird now. Give me a second. It's acting a bit weird. Okay. Let it get reboot. By that time, so far is it clear for you guys? So far is it clear for you? We don't know, sir. We were not there in between. We went when you were doing 19th sum. Now we came back when you were doing 20th. So far is it clear for you? Yes, right? Yes. So what we have to do is, now we have to find out a net profit before charging such commission. For that, what we should do, when we get a net profit before charging commission, we have to adjust our stock reserve. After adjusting stock reserve, what we should do is, after adjusting stock reserve, what we should do is, we have to find out the commission again. Okay. Okay, sir. So after service, it's repairs. It's repairs. Okay, sir. Repairs. How much is the net profit after this one? 36,000. Nice. Rupees 36,000. How much is a net profit before charging commission? We don't know. Let it be Z. How much is the commission? 0.1 Z. So Z is equal to 36,000 divided by 0.9. So how much it is? It is rupees 4,000 if I am not wrong. Rupees 4,000, I mean 40,000 it is. Total is 40,000 and commission is 4,000. Commission is rupees 4,000. As it is greater than 3,000, as it is greater than 3,000, we can take it directly. We paid 4,000 as a commission for this guy, repairs guy. So how much was his profit before charging such commission? Before charging such commission was 40,000 rupees. Now we have to reduce the unrealized profit minus unrealized profit. Okay, how much is unrealized profit, sir? We will look into question. Listen here. In a service department, 10,500 from spares is there, it seems. So in the spares, we have took more, right? More profit, although it is not done. So spares is sending service department at what price? At 5% above the cost. At 5% above the cost. So for spares, it is 10,500. 10,500 in which 10,500 in service. Working note number 2. Working note number 2. Computation of loading. Computation of loading. Invoice price is equal to cost plus loading. Invoice price is equal to cost plus loading. How much is the invoice price? 10,500 is the invoice price. Okay. How much is the cost? We don't know. Let it be C. How much is the loading? Loading they are telling 5% above the cost. So 0.05 C. So C is equal to how much? 10,500 divided by 1.05. 10,500 divided by 1.05. It is 10,000. C is how much, sir? C is 10,000. Therefore, loading is how much? Loading is rupees 500. Loading is rupees 500. Loading is rupees 500 relating to this. 500 relating to this. Also in repairs 2,100 is there. In repairs 2,100 is there. 2,100 in repairs. 2100 in repairs. Same working note. Working note 2. 2100 in repairs. So invoice price is equal to cost plus loading. Yes sir. How much is the invoice price? In repairs 2100. In repairs 2100 is equal to, how much is the cost? Cost we don't know, let it be C. Loading is how much? For repairs it is sending at 10% above the cost. So 0.1 C. So C is equal to 2100 divided by 1.1. 2100 divided by 1.1, which is basically ₹1909. Rupees 1909. So loading is how much, sir? Loading is 2100 minus 1909. 191 is a loading. Loading is rupees 191. Loading is rupees 191. So it is 191. Okay. Next repairs ka loading is there in the service department. Repairs ka loading is there in service department. So repairs rupees 22,000 in service. Working note number 3. Working note number 3. Invoice price is equal to cost plus loading. Okay. How much is the invoice price, sir? 22,000. 22,000. Do we know the cost? We don't know the cost. Let it be C. Do we know the cost? We don't know the cost. Let it be C. Plus how much is the loading? Loading. Repairs to service it is 10%. Repairs to service it is 10%, that is 0.1 C. So C is equal to 22,000 divided by 1.1. 22,000 divided by 1.1, which is 20,000 basically. So rupees 20,000. So loading is how much, sir? Loading is 2,000. Loading, it is rupees 2,000. So here I can say loading as here rupees 2,000 in the repairs, this one. So this guy is not having any spares etc. Whatever is there, it's his true profit. So we will get a net profit now. Actual net profit. Actual net profit before charging commission. Before charging commission. Okay. How much was that? It was negative 16,000. Okay. It was negative 16,000. Loss of 16,000. Now it will become loss of 16,691. Loss of 16,691. Okay. This will become how much? 28,200 will be 28,200 only. 28,200 will be 28,200 only. 40,000 minus 2,000 will become 38,000. It will become 38,000. Now minus commission. Minus commission. In the first we know that there is a loss. When there is a loss, either it's a 5% or 3,000, whichever is higher. As there is a loss, it is negative, and 3,000 is what it is higher. So 3,000 is what the commission for spares department. Second guy, how much is 10% of 28,200? 2,820, which is lesser than 3,000. So minimum 3,000 you have to pay for him. Okay, 3,000. For the next guy, it is 10% of 38,000, which will become 3,800 or 3,000, whichever is higher. 3,800 is higher. So he will get a commission of 3,800. Okay. Now we will get a correct departmental profit. Actual departmental profit. Actual departmental profit. How much it is? It is negative 19,691. Here it is 25,200. Here it is 38,000, 35,000, 34,200. 34,200. Tell me guys whether this question is clear or not. Is this question clear or not now? Hello people. Hello. Is it clear or not? Clear? Okay, fine. Great. Take a screenshot, okay? Take a screenshot. Yeah, huge sum. Actually not a huge sum. Adjustments are more. When we do like on our own, no, it will not take much time. To explain the calculation, it will take time. Practical paper, at least one time you have to go through completely 100% of study material. Next other 2 times you have to solve the questions which is there in the study material. So much is enough. If you read the 100% of one's study material once, account study material, upon that if you solve these sums 2 to 3 times, other than that 2 to 3 times, then trust me, scoring 80 is not a difficult task. Scoring 80 is not a difficult task. Sir, why we should score more? We can concentrate on other subjects too, no? The thing is, if you score more, score 80 here. If you score 80 here, it will take the aggregate of the other 3 subjects. In the other 3 subjects, if you get 40, 40, 40 also you are pass. So, make your strong subject stronger. Weak subject, don't make it weaker, make it as average. Okay. So many people will be having that misconception. Sir, I know that subject, so I am not going to study that. I am going to study subject which I don't know. Don't do that. How much ever time you want to give to this paper, you give, because this will get you more marks. More marks means more possibility of clearing. The other subjects, make sure that you will get 50 plus or 40 plus. And this will help you in getting an aggregate. So make sure your stronger subject will become strongest and weaker subject will become average. Yeah, you can prepare, sir. Not a big deal, you can prepare. Just cope up, like give your 100%. Everything is possible. Till June you have a lot of time. Okay? Give your 100%, it's possible. Yes. Okay, screenshot number 1 done. Take screenshot number 2. Screenshot number 2. Screenshot number 2. Wait. Yeah, screenshot number 2 done. Screenshot number 3. Screenshot number 3 done. Screenshot number 4. Screenshot number 4 done. Screenshot number 5. Screenshot number 5 done. Screenshot number 6. Screenshot number 6 done. Screenshot number 7. Screenshot number 7 done. Okay, fine. Now we will quickly see the exercise question and we will take a break and we will continue with the next chapter. Okay. Yeah. First they are asking about a true or false. In a departmental P&L, insurance on stock should be apportioned based on the average value of a stock ratio. True. Stock means stock insurance means of course you have to apportion it on a stock. True. Second one, in the final balance sheet, closing stock of a department receiving goods from another department at a cost plus 10% profit should be shown at the cost in the receiving department. False. It will be shown at the price at which it is received. That stock reserve will be, taken out in a general P&L. Okay, sir. Third one, for a apparent profit or loss, that is difference between a sale price and a invoice price in a stock and debtor method, there journal entry is passed involving branch stock account and a branch stock adjustment account. True, because that is where you are going to transfer, no, stock balance you are going to transfer into the branch stock adjustment account, if you remember. Under stock debtor system of branch accounting, branch stock account is maintained at a cost price. Whether it's maintained at a cost price? No, it is maintained at a invoice price and a sales value. The objective of keeping a branch stock account at a invoice price under a stock debtor system is to ensure control over stock. True. Your branch maintains stock account, branch debtor account to control, to maintain a control over our stock and a debtor. Branch stock adjustment account is used to record the loading on stock and on goods sent and to record the apparent profit and loss. True. Branch stock adjustment is open for that only, no. Under a final account method, profit or loss of any branch is ascertained by preparing a branch P&L in place of branch account. True. Final accounts method. First method, debtor method, how we are going to ascertain the profit or loss? Branch account. Okay. Under a debtor system of maintaining a branch accounts, depreciation does not appear in the branch account. Depreciation does not appear in the branch account. True. Why? Because opening asset minus closing asset after adjustment of depreciation, there only it will get adjusted. No need to adjust it again. Stock debtor system of maintaining a branch account is used for an independent branch. Whether for independent branch it is used? No sir, independent branch will maintain its own book. Stock debtor, final account method under a wholesale price, all these for the dependent branches. Independent branches maintain their own book. Okay sir. 10th one, for independent branch, incorporation of a branch trial balance is required. Incorporation of a branch trial balance is required? Yes, it is required. Independent branch, we have done yesterday. Fill in the blanks. In a branch account, in debtor system, opening balance of assets are debited to the branch account. A branch which keeps complete record of dash all accounting transaction are called as complete record of all accounting transaction are called as independent branch. A branch which does not keep the full system of accounting is known as dependent branch. Stock and debtor system is known as analytical method. Branch account is prepared to ascertain the profit or loss or a net profit or loss of the branch, P or L of the branch. The system in which profit and loss made by the branch is determined by preparing a branch trading and profit and loss account at a cost price is called as final accounts method under cost basis. Final accounts method under cost basis. Okay. The accounts prepared for ascertaining the amount of gross profit earned by the branch under stock and debtor method is gross profit. To ascertain the gross profit, we are going to prepare branch adjustment account or a branch stock adjustment account. The account prepared to adjust the loading included in the value of opening and closing stock at a branch is termed as stock reserve. No, stock reserve, opening and closing. The account prepared in the same way as when the goods are invoiced at cost, except that all entries are made at a invoice price, is termed as branch stock account. Here all the adjustments will be made at a invoice price. The goods sent by the head office may be either at cost price or cost plus profit, which is basically invoice price. Okay, there are certain numerical questions are there, you can do it. Okay, try to solve it. there are around five questions are there. Kindly try to solve it. Okay, departmental account, branch account is done. Any doubt in this? Department, branch, leases, one chapter is done. Is there any doubt in this particular chapter, guys? Hello? No doubt. Fine, fine. Now it's 6 almost. We will take a break till 6:15 or 6:20 we will take. Later we will start with a new chapter. Okay? Actually there are two chapters. One is insurance related, one more is hire purchase related. Tell me which I should start. Whether you want me to start with hire purchase or whether you want me to start with insurance. Insurance, hire purchase. I need one more vote. The person who want to break it. One hire purchase is there, one insurance is there. I need one more person who will break this tie. Come on, someone. Insurance. So two people are voting for insurance. So we will start with the insurance. Okay? Okay. So we'll take a break till 6:20. Bye bye. I am starting a new recording. Okay? Bye.